The tax system in the Kingdom of Saudi Arabia is evolving and became one of the crucial elements of its economic landscape, particularly as the country diversifies its economy away from energy sector. With significant reforms and modernization efforts in recent years, Saudi Arabia's tax framework become increasingly sophisticated. And as the economy is growing rapidly and in light of the current government-backed incentives, this puts KSA in the sights of foreign investors to attract foreign investment. And today within this video we are going to provide a quick overview which will cover the key components of the tax system in the KSA, including taxes on income, value-added tax, and also other essential levies that shape the business and investment environment in one of the Middle East's largest economies. Hello everyone and welcome to the Tax Gate. Hit the subscribe button and let's get started. From a helicopter view, the tax system in the KSA would include the following types of taxes. Let's start directly with the taxes on income, and here it would depend on the nationality of the business owner, as we should differentiate between either being Saudi Arabian and GCC entities, as you should be liable for paying zakat, or being non-Saudi Arabian and non-GCC entities, and here you should be liable for paying income tax, and we are going to understand further later in our video. Also, we have the value-added tax, and VAT was introduced in the KSA on January 2018, and VAT in KSA would apply on the supply of goods and services, including the imported goods and services as well, unless there is specifically exemption in place under the VAT law. Moving further, here we have also excise tax. An excise tax went into effect in KSA in June 2017, which is a form of indirect tax imposed on specific goods that would be qualified either harmful to human health and the environment. And finally, custom duties, which apply on all goods imported to the Kingdom of Saudi Arabia, unless a specific exemption is in place. And these would be the main types of taxes in the KSA, which would materially impact your business. However, some other taxes and levies would be in place, such as the following. We have taxes on personal income, and here we would highlight that generally individuals earning from any employment in the KSA are not subject to taxes in KSA. However, for self-employed individuals, here once again we would differentiate between those who are Saudi Arabian and GCC nationals, or the ones that are non-Saudi Arabian and non-GCC nationals, as the tax treatment would be different, as we are going to understand later in our video. Also, we have real estate transfer tax, which would apply on sale, transfer, and any similar activities of land and property, and shares in real estate companies as well. And finally, we have also the white land tax, which acts as a penalty to landowners for not developing the land. Now let's dive a little bit deeper into each tax type, and let's start with the taxes on income. And here, as we highlighted at the beginning of our video, it should depend on the nationality of the business owner either to pay zakat or normal income tax. Let's understand zakat and what does it mean. Zakat is based on Islamic concepts, and zakat is a form of almsgiving or charity, being a mandatory act of giving a portion of Muslims' wealth with specific threshold to those who are in need. Zakat is typically calculated as 2.5% of a Muslim's accumulated wealth, including savings, investments, and certain assets, if they meet or exceed a specific threshold. Saudi investors and those from GCC countries who are considered to be Saudi citizens for Saudi tax purposes are liable for zakat. That was briefly for zakat, and now let's move to the income tax. So, corporate income tax rate in the KSA is 20%, and generally non-Saudi and non-GCC investors or permanent establishments are liable for the 20% corporate income tax on their net adjusted profits. Only for some specific energy production activities and businesses, the corporate tax rate would be between 30 to 85%, and such would include the income earned against oil and hydrocarbon production in Saudi Arabia, and also the natural gas businesses. If both Saudi and non-Saudi investors own the company, they will pay both income tax on the portion of income attributed to non-Saudi sources, and zakat on the rest. Good. That was for the income tax, and relatively we would quickly highlight that in the KSA withholding tax regulations went effective in July 2004. And generally withholding tax is imposed on payments made by resident in Saudi Arabia to a non-resident against various types of income and with rates starting from 5% and going up to 20% as follows. 5% withholding tax mainly against dividends, interest payments, rent, technical services, income from air tickets, international telecommunications services, and insurance premiums. Also we have 15% withholding tax against royalty payments or related party payments and also some other services, including training, recruitment and marketing services as well. And finally 20% withholding tax against management fees provided that certain terms and conditions are in place. And now just before moving to the next item here we should highlight that the withholding tax rate may be reduced where a relevant double tax treaty is in force. Well, moving further here we would briefly cover also the capital gain tax in the KSA. And here we would highlight that generally assets disposal is subject to capital gain tax unless a specific exemption is in place. Also we would specifically highlight that for the disposal of shares we would differentiate between either these shares unlisted or listed within Saudi Stock Exchange. So, for the unlisted shares, capital gains realized by a non-resident or non-Saudi investor from the sale of shares in a KSA resident company will be subject to capital gains tax in KSA at the rate of 20%. This rate can be reduced or completely relieved in case we have double tax treaty in place. Well, for the shares listed on the Saudi Stock Exchange, then capital gains on the disposal of shares would be exempted from tax, provided that certain terms and conditions are in place. Good. So that was briefly for the capital gain tax. And now let's move to the next item here today, which the transfer pricing in the KSA. So transfer pricing rules were introduced in the KSA, which are broadly in line with the OECD transfer pricing guidelines. Accordingly, taxpayers are required to adhere to the arm's length principle. Interestingly, 100% zakat payers became required to comply with the TP regulations as well. The burden of proof being compliant with the arm's length principle is on the taxpayer, and here taxpayer is required to maintain robust transfer pricing documentation to support the company's position upon tax audit phase. Good. With this, we would say that we have briefly covered the part of taxes on income in the KSA, and now we can move to the indirect tax part. Let's start with the VAT system in the KSA, and here. VAT was introduced in the KSA in January 2018 at a standard rate of 5%, however, starting July 2020 the standard VAT rate was increased to be 15%, which is applied to almost all supplies of goods and services in Saudi Arabia. So, the present VAT rate in Saudi Arabia is 15% for businesses with a value supply more than SAR 375,000. Also we would highlight that certain goods and services are exempted from VAT or subject to VAT at rate of 0%. And this for input VAT recoverability purposes, as the input VAT related to the VAT exempted products would not be refundable. However, for the ones that are subject to 0 VAT rate, then they are entitled to refund the related input VAT. Good. So, now we have just walked through both VAT system in the KSA, and now let's move to the next item here, which is the excise tax. Well, excise tax law came into force in June 2017. And excise tax is chargeable on the importation or production of certain excise goods released for consumption in the KSA that are considered harmful to human health. The excise tax is ordinarily chargeable by reference to the tax base of the goods concerned. And the tax base here is the higher of either the retail selling price of the goods or the list price, which is determined and published by the relevant authorities. Well, moving further, we have also customs duties. So, all goods imported to the Kingdom of Saudi Arabia are subject to pay custom duties unless there is a duty exemption or duty relief in place. Customs duty rate would vary depending on the type of the imported goods, and generally the rates would between 0 and up to 100% for some specific selected items. Importing machinery and raw materials for some certain projects may be exempted from customs duty as long as they are not available in the local market. And finally, we would highlight the KSA is part of the GCC Customs Union, where goods in free circulation within the GCC origin would normally be exempted from the customs duty upon import into the KSA. Good. So now we have slightly covered the main types of taxes in the KSA, both direct and indirect taxes that would materially impact your business there, and now let's do the same for the remaining types of taxes in the KSA. Let's start with the taxes on personal income. And here we would highlight that generally there is no individual income tax in Saudi Arabia, and here we are talking about individuals' earnings being derived from any employment in Saudi Arabia. All employees in the KSA, both Saudi nationals and non-Saudi nationals, would be required to pay Social Security contribution on a monthly basis with rates that start from approximately 2% and up to 12% depending on the employee nationality. For self-employed individuals in the KSA, then once again, we should differentiate between tax treatment for Saudi and GCC nationals and the one for non-Saudi nationals. So as highlighted at beginning of our video, that citizens and GCC nationals are liable only to pay zakat, and, for non-nationals or expats, they are usually taxed at the same rate as corporate income tax of 20%. Good. So, moving to the next item here, which is the real estate transfer tax. Real estate transfer tax went effective in Saudi Arabia in October 2020 at rate of 5%. Real estate transfer tax applies to all sales, assignments, transfers, and similar of land and property, as well as the rights and shares in real estate companies, unless we have a specific exemption in place. Here the tax liability would be at the transferor side. However, both seller and buyer can agree to share the responsibility for paying the real estate transfer tax as long as this is mentioned within the agreement. Good. And now with last tax type today, before moving to the tax credits and incentives in the KSA. The White Land Tax. White Land Tax regulations went effective in June 2016, and it is applied at rate of 2.5% on all undeveloped residential and commercial plots within urban boundaries. So, in essence, this tax acts as a penalty to landowners for not developing the land. Well, this is in brief the tax system in the KSA, and now let's cover one of the most important topics today, which is tax credits and incentives in the kingdom. Saudi Arabia offers several tax credits and incentives for businesses in different manners as follows. Let's start with the tax credits and incentives for businesses investing in less developed regions of the kingdom. This applies to 6 less developed regions in the kingdom, and here these tax benefits are granted for a period up to 10 years from the start of any project. So, qualifying investing businesses would be entitled for the following tax deductions. 50% tax deduction on training expenses for Saudi employees. 50% deduction on salaries paid to Saudi nationals. 15% deduction on non-Saudi capital shares, as long as specific conditions are met. Also, further deductions would apply if investment capital exceeds SAR 1 million and employing more than 5 Saudi nationals in key roles. Good. Also, the Saudi government has also created an integrated logistics bonded zone, and here the government offers interesting tax incentives for businesses setting up in this zone, as they can benefit from the following incentives for a period up to 50 years. 0% income tax. Exemption from withholding tax. And also suspended customs duty. Good. And now finally, with one of the biggest developments in Saudi Arabia's tax regime. And here we are talking about the 30 years tax relief package for multinationals who establish their regional headquarters in the kingdom. These initiatives offer entities that meet the relevant criteria would enjoy a tax incentive of the following. 0% corporate tax rate. And 0% withholding tax on approved regional headquarters activities for a period of 30 years. In addition, these businesses may also benefit from tax incentives available in certain regions. Great. That was a quick introduction to the taxation system and tax credits and incentives in the KSA. Like and subscribe if you would like to see more videos, and thanks for watching TaxGate.